Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm here with the third video of my series about investing into the world with European UCITS ETFs, and today it's my cup of tea. It's about dividend focused ETFs, and it's all about European ETFs, and I'm discussing 32 in this series with 6 that are available in different currencies on the 6 stock exchange, and they invest in companies all over the world. They are also based in Europe, so they are all UCITS ETFs. They distribute a dividend, of course, and they are not synthetically replicated. If you know of any other European-based ETF that I missed with these parameters, please comment down below and I will make sure that in 2026, when I remake this series, that I include the ETFs that you mentioned there. For my EU series, I got good results and good comments, so there I have some nice additions for my series of 2026, so I hope this is the case for this series as well. And as said earlier, it's about my favorite type of ETFs, so they are there to deliver a nice dividend combined with the possibility to see a decent appreciation as well. Unfortunately, in the past, actually 10 years, they haven't performed that well except one fund, and you will see what one that is. And yeah, it's just, it are my ETFs. I like them a lot. I like researching them. I like to see what they are doing. Also for the list of stocks that they are following and why they are investing in those stocks, I can watch at those lists for hours and hours. I'm a bit of a geek in that way, but yeah, the first ETF, for example, that's already my thing, and that's VHYL. It's the Vanguard FTSE All World High Dividend Yield UCITS ETF from Vanguard. So total expense ratio of 0.29%. You will see that a lot of ETFs have a higher total expense ratio in this list compared to the previous two videos. It's an Irish-based ETF, and you can buy one share for 61.79 Swiss francs on the STOXX stock exchange. You have a dividend being paid out in the form of US dollar, and it invests towards 2,179 companies. So well diversified fund, although yeah, the top 10, top 20 companies are making up a huge part of the fund, of course, but still you invest towards 2,179 companies. There is 5.5 billion invested towards this ETF, and it's a sampling ETF. That's always good when you have that amount of holdings, so that the fund managers have a bit of wiggle room to buy the shares. And in the past year, it is up 5.32%. The past 3 years, it is up almost 30%. And in the past 5 years, it is up a little bit over 60%. And I forgot to mention that this number is always in Swiss francs. So no matter what is standing here in of currency for buying it on the SIX stock exchange, when it's US dollar, British pound, or euro, this number is always in Swiss francs. The performance is given in Swiss francs, euro, and US dollar, because you know the currency has an effect as well. And then I always give the dividends per year. So this one pays out quarterly in the most common months for Vanguard, and it has a dividend yield of 2.87%. And I calculated it twice, I calculated it thrice, but it's true, it's only 2.87%, although it says in its name high dividend yield. A lot of people a couple of years ago, when everything was pretty cheaply priced, VHYL had a much higher dividend yield. SDGPEX and TDIV also had a lot of higher dividend yield, GLDV as well. And then they said that were high yielding ETFs and you should stay away from them. But that was just because the stocks in those funds were really cheap, and then the dividend yield goes up. So when you see a dividend yield of 5 or 6 or 7%, sometimes it's just because the underlying values are very cheap, and the dividends, they don't go down as easily as shares, luckily. So here you can see the dividend distributions of the past 12 months of VHYL, and yeah, as usual, around June, July, there you have the highest payout in the year. But for the rest, it's a really nice fund with a nice distribution. Only the total expense ratio should come down, but I will say that with almost all the ETFs in this video. So then you have SDGPEX. It's actually, I think it's the most expensive one. Yeah, it's true. The next two are with a total expense ratio of 0.45. And unfortunately, my wife and I, we invested into SDGPX when we started, because yeah, I should have looked at the total expense ratio there. BlackRock blindsided me there a bit, like a lot of people are blindsided. It's still a good ETF. I like it a lot. It has nice companies in it, but BlackRock should definitely come down with 0.20% for sure on this ETF, because they are just ripping us off. It's a German-based ETF. You have one share for 31.785 euros. So on the 17th of October, that was, you could you could see it on one of the previous slides. It was way here in the bottom that it's on the 17th. So I'm recording this on the 19th on Sunday, just a couple of hours before the Formula 1 starts. So I hope I get done with recording the other two videos that I still need to do. But let's continue. So it pays out euros in dividends out in euro. So for European investors, the SDGPX one is just a great ETF. Even in Switzerland, you get euros for euros. It invests in 100 holdings, not crazy with 100 in its name. And there is almost 3 billion invested towards this ETF. It's a fully replicated type, and the past year it is up 8.31%. The past 3 years it is up 31.47%, and the past 5 years it is up 55.61%. So being up 8.31% isn't bad at all. If I look at the all world ETFs and also the MSCI world ETFs, it is outperforming all of them in the past year. So not for the past 3 years and not for the past 5 years, but for the past year, it really started picking up again where it should have been at in the past couple of years. But I'm saying it, the focus was on growth stocks in the market overall. Dividend stocks were hated upon, so they are catching up a bit this year. Maybe next year it's going to be different, you never know, but I will stick to my strategy, to our strategy. So my wife and I have determined our strategy, and we will continue investing towards this ETF for sure. Although it needs to come down because it's still around 60% of our ETF portfolio, and it needs to come down to 35%. It pays out quarterly dividends, so in the months January, April, July and October, and it has a dividend yield of 4.83%. Once again, it's 4.83%. That's not a very high dividend yield. You have other dividend yields that are way up there. Next video will deal with those three ETFs that we have on the SIX stock exchange and in Europe. And here you can also see the dividend of the past 12 months for the ETF, and they are already distributed. So the last one was paid only a couple of days ago, and with that amount I bought FLXD. You can see that in one of my previous videos. So if you are interested in that, please check that out. Then we can go to TDIV. The VanEck Morningstar Developed Markets Dividend Leaders UCITS ETF. Completely different than the other two that we dealt with so far. So VHYL has 38% in the USA. Then you have SDGPEX, which has the USA as the second or the third most represented country, but it's only about 12%. And then you have TDIV, where it's the second one with 13%. So it's a Dutch-based ETF from VanEck, and the total expense ratio is 0.38%. You can buy one share for 41 Swiss francs on the SIX stock exchange, and it pays out a dividend in US dollar. In the rest of Europe, you can buy it for euros, and it still pays out its dividend in US dollar. It has 100 holdings in it, just like the SDGPEX one. And my wife and I, we were also investing a bit in TDIV back in Belgium. But I think we had 2,300 euros into it. And then we decided to sell it because in the 1 year and a half that we were investing into TDIV, SDGPX was outperforming TDIV. But if you look at the performance right now, nothing can beat TDIV. Unfortunately, the 15% withholding tax in the Netherlands is sometimes a deal breaker for a lot of people. For me, I wouldn't care that much. But yeah, we settled on a strategy and we are going to maintain our strategy. I know that for 1 year and a half, SDGPX was better than TDIV. That period will come back for sure. So, but VanEck is truly amazing fund manager. They have a lot of amazing ETFs. So when you are living in the Netherlands, yeah, VanEck is just the place to be. And yeah, I forgot to mention it. It's up 13.22% in Swiss francs this year, so that's enormously. Look at that in US dollar, 23.31%. The past 3 years, it is up 50.27%. That's more or less a little bit lower than the amount that the all worlds are up in the past 5 years. So the VWRL from Vanguard is up 58.05% in the past 5 years, and this one does it in 3 years, and then almost in 3 years because it's 8% lower, but you get what I mean. And in the past 5 years, it is up almost double from the VWRL. That's just incredible. Then it pays out quarterly dividends. So in the most common months from VHYL, we went for VHYL. Maybe we should have stick to the TDIV. I already knew the ETF, but yeah, VHYL. It was it's completely different constituted than TDIV and also SDGPX. So we wanted to have complementary funds that added to each other, and VHYL was just way higher in the number of holdings. So if we would have chosen TDIV, it was 100 shares, GLDV is 100 shares, SDGPX is 100 shares, and we just wanted one fund that was a little bit more diversified than 100 shares. So we went with VHYL. But 100 shares is also already good diversification. Dividend yield is 4.03%, and here are the past 4 dividend payments of the ETF from VanEck. And once again, just like in the first video, VanEck, they are really nice. They are just straight out. They say you will receive 19 cents and that's what you're going to get per share. So no rounding or errors with that. You exactly get what you deserve, and that's 90 cents per share, then 90, then 36, and then 34. So yeah, I said it in the first video, no bullshit here. So that's what I like to see. I want to see it in the other ETFs as well, but some people, they are really strict about it and they want to see a lot of numbers behind the dot, but you get ripped off with rounding errors one way or another. So sometimes it's in your favor, sometimes it's not in your favor, but I like this one more. Then you have GLDV, another ETF from our ETF portfolio. So with TDIV, we parted from it back in Belgium still, and GLDV in Switzerland. We started buying GLDV in October of 2023. The total expense ratio is 0.45 for this SPDR ETF, and it's an Irish-based ETF. You can buy one share for 28.45 Swiss francs on the SIX stock exchange, and you get dividends in the form of US dollar. So there are 97 holdings into this ETF, and there is a little bit over 1 billion invested towards this fully replicated ETF. In the past year, look at this, it's negative. It's down 2.46%, and that's total return. So that's with the 4.02% dividend yield included. So GLDV isn't performing at all well, and that's why my wife and I, we are continuing to put money towards GLDV because it's going to recuperate for sure. The companies that are in it aren't bad at all, but they aren't in the favorable zone of the markets today, but one day they will pick up. They have nice growth of revenue, they have nice dividend growth, they are performing well, but they are just lagging behind. So also over the past 3 years, only up 12.18%, and in the past 5 years, only up 38.45%. So not performing well at all, but as I'm saying, SDGPEX, we are leaving a bit behind because it needs to be reduced, and this one we need to build up. And in this down period, I think we are really doing well in it to keep investing towards this ETF. And these are the last 4 dividend payments that GLDV did. And when you look at the months of the payout, so you have VHYL in March, June, September, and December. Then you have SDGPEX paying out in 1, 4, 7, and 10. And then with this fund, we have the rest of the months covered. So that's also a nice thing in our ETF portfolio. And then we can go to GLDVD from UBS, the S&P Dividend Aristocrats. So the same name as the previous one. So here you have the Global Dividend Aristocrats, here the S&P Dividend Aristocrats. ESG is in the name, and you have a total expense ratio of 0.30%. So not bad at all, because it's beside the VHYL one of 0.29%. It's one of the cheapest ones. The next one is also from Franklin, is also 0.30% total expense ratio. So those are the 3 cheapest ETFs from this video. It's an Irish based, and yeah, UBS, they do it often, putting the IE in the name already, so that you know that it's Irish based. And you can buy one share for 11.472 US dollar on the SIX stock exchange. You get a dividend being paid out in US dollar, and there are 99 holdings into this ETF, and there is 101 million invested toward this fully replicated type. And in the past year, it is up 3.12%. In the past 3 years, it is up 20.63%, and in the past 5 years, it is up 51.93%. Pays out 2 dividends per year. It's UBS, so you already know in which months it's going to pay out its dividend, and the dividend yield is 3.40%. And these are the last 2 dividend payments of this year. Then we can go to the Franklin Global Quality Dividend UCITS ETF, the FLXX. So total expense ratio 0.30%, so one of the 3 cheapest ones in this video. Irish-based ETF, and you can buy one share for 38.07 US dollar. The dividend is being paid out in US dollar as well. There are 98 companies into this ETF, and there is 86 million invested towards this ETF. It's a fully replicated type, and just like the GLDV ETF, it is down 1.73%, even with the dividend yield of 2.41% included, because it's total returns. But for the past 3 years, it is performing a little bit better than the GLDV ETF with 23.83% up, and in the past 5 years it is up 46.31%. And here you can see once again the past 4 payments of this dividend ETF. And yeah, here it's quite obvious that the European companies contribute a lot in this period to the dividend payments. Of course, the rest of the world as well, but in the UK and the US, you have quarterly paying dividends that are most common, and sadly enough, in the rest of the world, and especially in Europe, that's not the case. And then here in this ETF, it's only available in the rest of the European continent, not on the SIX stock exchange. So the QDVW of iShares MSCI World Quality Dividend Advanced UCITS ETF. And here you see advanced. It used to be ESG. So they changed it because ESG is now more or less a little bit negatively viewed by a lot of investors. So they just eliminated it from the name and changed it to advanced, but it's still the same stock. It has the same ISIN code. The total expense ratio, sadly enough, also stayed same with 0.38%. You can buy one share for 6.768 euros on the Xetra, and the dividend is being paid out in US dollar. There are 202 holdings in this ETF, and there is almost 1 billion invested towards this ETF. Fully replicated type, and in the past year it is up just a little bit over 0%, so 1.24%. The past 3 years it is up 32.18%, so that's not that bad at all. And in the past 5 years it is up 52.11%. So almost reaching the same value as the VWRL from Vanguard, where that one has 58%. They pay out 2 dividends per year in May and in November, and the dividend yield is 2.27% currently. And these are the last 2 dividend payments that this ETF made. Then we can go to the Fidelity Global Quality Income UCITS ETF, the FGQD, with a total expense ratio of 0.40% and Irish-based one. So you have 2 types on the SIX stock exchange. You can buy it in Swiss francs for 7.969 Swiss francs, or in US dollar for 10.094 US dollar. The dividend is being paid out in US dollar for both, and you have 249 companies in this ETF, and 621 million Swiss francs is invested towards this ETF. It's a fully replicated type, and in the past year it is up 2.19%. The past 3 years it is up 32.58%, and in the past 5 years it is up 56.44%. So really getting close to the VWRL from Vanguard, and that's the most named ETF. But I should say, remember, you also have the Invesco one, just as a small reminder, with a little bit cheaper total expense ratio. But I just remember the number of the VWRL from the top of my head, and from Invesco I don't know it from the top of my head. I even think it's too young to even name it. Yeah, that's the case. It's just too young. So it pays out quarterly dividends, and it's in February, May, August, and November that it pays out dividends, and the dividend yield is exactly 2%, or was exactly 2%, because it's from the 17th of October, of course, all these data, so don't forget that. And here are the last 4 dividend payments of the Fidelity Global Quality Income UCITS ETF. Then we can go to the other one, which is actually Swiss francs hedged, and it's the FGQC, only one ticker because it's only available on the 6 for 7.607 Swiss francs. And I really like Fidelity for doing this. Okay, the total expense ratio is quite expensive, but wait a minute, I will explain why it's not that bad at all. So it's an Irish-based ETF. You have the same amount of holdings, 253 as the previous one, only 21 million Swiss francs invested towards this ETF, and it's already around for more than 5 years. So I think this is really a pity. A lot of Swiss investors should start investing towards this one. It's a fully replicated type. The past year it's up 7.55%, so not bad at all. The past 3 years it is up 50.40%, and in the past 5 years it's 62.81% up. So better than the VWRL, and it pays out quarterly dividends in these months, and the dividend yield is 2.07%. So okay, it's a little bit lower the than the dividend yield of the VHYL, but it's higher than the VWRL from Vanguard, and the distributions are actually also quite evenly distributed over the year. And if you receive otherwise your dividends in the form of US dollar, and you have a bank that is really annoying and just like UBS charges 1.7 cents in conversion rate more than what the current currency rate is for converting your currency, then you are way higher than the 0.45% of total expense ratio that you are paying for the Fidelity Global Quality Income. So I think a lot of investors are really neglecting FGQC. Either they don't know that it exists, but I think a lot of people that are investing in other global quality income ETFs in Switzerland should consider this one to increase their Swiss francs exposure, and also Swiss francs receiving of dividends. You don't have a lot of ETFs in Switzerland that are investable in Swiss francs and also pay out Swiss francs. Most of them invest directly into Switzerland then. This one is an exception, and I really think it's a great ETF. I have it on my list. I'm going to discuss it with my wife as well, and maybe my wife and we are going to start investing towards this FGQC ETF. But yeah, I also want to invest in JEPG from the next video, so it's it's a difficulty. And then we have the GGRW from WisdomTree. Finally, a WisdomTree ETF in this series. It's a global quality dividend growth UCITS ETF. Total expense ratio 0.38%. Irish-based ETF, and that's normal, of course, because when you have a global ETF that receives dividends from everywhere, Ireland has a lot of good tax treaties with other countries, including the US. So a lot of companies are, of course, liking the fact that they can start a fund there, and that everybody in Europe knows that Irish funds have an advantage when it comes to receiving dividends from the rest of the world, and especially the US. You get one share for $37.68 on the SIX stock exchange, and it's a dividend growth ETF, so a lot of people are drawn to that. It's the only one that I'm mentioning with a really focused dividend growth strategy. So you also get a really good diversification with 529 companies in this ETF. There is 273 million invested towards this sampling ETF, but in the past year it is also down minus 1.40%. So that's the third ETF of this series, of this video, that is down for the year, and we will get a few more in the next video, but or one more or a few more, because it's in two currencies that it's down. So the past 3 years it is up 26.70%, and in the past 5 years it is up 38.02%. So not that great of a performance, and a lot of people are maybe looking at these numbers and shying away from it. But I think that when you like the strategy of this fund, you should look at what stocks are in the ETF, and if you like what you see, just keep investing in it, because it's just like with GLDV, the companies behind the ETF are in fact okay, but they are just not, they are not in the grace of the market today, so they don't see a lot of inflow, and when you don't see a lot of inflow, you don't go up as well. So the Magnificent Seven, you have a lot of funds that invest towards the S&P 500 into global markets, where the Magnificent Seven is also included. So a lot of money is flowing towards those 7-10 companies that make up the bulk of those funds. So you have a lot of inflow, they go up, and the people say they are great, but they are way overvalued. They have an average PE of around 40 right now. I don't like that at all. So that's also to you. So not financial advice, just do your own research, check what I'm saying here. Also check in what you want to invest, and then make your own decision and go for it. Another good thing from WisdomTree, I already said it in my series about UCITS ETF that invest towards Europe. They decided to go from 2 dividends per year to 4 dividends per year. So I really like WisdomTree for that. I was asking for it a year and a half ago, and they pulled through. So WisdomTree, thank you for that. A lot of investors are going to be, grateful that you done it. I hope UBS will do it one day as well, and you have HSBC as well that pays only 2 dividends per year. Also, sometimes iShares also only pays out 2 dividends per year. So there is still a lot of ground to be shaken up. Dividend yield is 1.27%, and here are the past 4 dividend payments of the WisdomTree ETF. And then we can go to the overview of this video, and you can see here the sad red numbers of GLDV, FLXX, and GGRW. So they are actually not performing that great. You can also see it in the 3-year performance. So you have to look at it with a bit of a pink glass, with pink glasses. So you have to look at it from the bright side. If you are investing in it now and they recover, you will have a bigger return in the coming years. And then here the total expense ratio, this is really hurting me. The cheapest ones are 0.29%, 0.30%, and 0.30%. So when you look at that, they are really expensive. And I understand you have a lot of cost with paying the dividends. But on the other hand, why don't you go to lower total expense ratio? It is possible in America. Why isn't it possible here in Europe? It's just incredible. We have also a lot of money flowing towards Vanguard, BlackRock, Invesco, Spider, UBS. So they should make it cheaper. UBS, at least, they are really doing the efforts with lowering their total expense ratio for some ETFs. So they can expand on that. And by doing that, they are also putting pressure on the rest. Vanguard lowered the total expense ratio a little bit on 6 ETFs recently, and except it was also on the VWRL, so that wasn't clear from the first reporting on their website, but I saw it, so it's true. And yeah, it's just annoying to see these high total expense ratios, and also a bit annoying to still see those twos here in the list. So it's both from UBS funds, or QDVW is from iShares, so it's from UBS and iShares. So hopefully they change that to quarterly paying dividends as well. But with that being said, thank you for watching to this one. Please consider subscribing to my YouTube channel. Hitting that like button helps out my channel enormously as well. And thank you for looking at this video, and see you on the next one on my YouTube channel. Bye.